Hi guys, this is FX. Please kindly subscribe to my YouTube channel, comment and share. If you're interested in learning Forex, send me a DM and then I'll add you to my trading community. So in this video, I'm going to take you through how to use the Fibonacci tool. Fibonacci tool is one of the most important tools that we use to analyze the market as a professional Forex trader. So if you're a beginner Forex trader and you learn how to use the Fibonacci tool correctly, then it's going to change the game for you. From the onset, you are going to learn how to trade as a professional trader. So once you are a beginner trader, make sure you watch this video to an end and then take notice of every details of this video so that you start trading and making decisions now Forex trader. So the Fibonacci tool, first of all, we will have to add the Fibonacci tool to our chart. And so this is the MT5 app on my laptop, and then if you want to add the Fibonacci tool, you click on insert. Okay, so you click on insert, then you click on object, then you select Fibonacci. Now we have different types of Fibonacci. So in this video, we're going to talk about the Fibonacci retracement tool. So you click on Fibonacci retracement, then you first of all, you have to know the overall direction of the market. So for example, this particular market is in an uptrend and there is a 4-hour time frame and the market is an uptrend. So you look out for a recent demand area where the market pushed or where the market gained a momentum to push to the upside. So this, when you check this chart, this is the recent demand zone that pushed the market to the upside. So you place the Fibonacci tool over there. Okay, then you extend the line to the 0%. So that is it. This is the Fibonacci. So these are 100%. So it's either you place a 0 here, or you can place the 100% here. Either ways works perfectly. So you place your 100% at the recent demand area on the market, and then you extend it and place your 0% at the recent resistance area at the market, or the recent supply area of the market. So this is the resistance zone and this is the support zone. So once we place our 100% here and then this is our resistance zone, then we extend the chart to the right side. Okay, so beautiful. So this is how we draw the Fibonacci tool. So the Fibonacci tool have different levels, and these levels are the turning points that we expect the market to reverse. Okay, so we have the 23.6 Fibonacci level, we have the 38.2 level, we have the 50% Fibonacci level, 61% Fibonacci level, we have the 78% Fibonacci level, which is somewhere here, and we have the 100% Fibonacci level. So the most important levels that you need to know is the 23, 38, 50, 61, and then the 78, which is somewhere here. Okay, so now this particular market is in an uptrend, and we know that in a trend, market moves impulsively and then market also retraces. So this is an impulse move from here to here, then the market started retracement to the downside. So once the market is retracing to the downside, where do we expect the market to start buying so that the uptrend continues? That is why the Fibonacci tool is very important. So we have the 23%, 38, 50%, and then the 61. Now, depending on the strength of the trend, okay, so if the trend is very strong, then you expect the market to retrace to 23%, 23.6%, and then the uptrend continues. Okay, better still, the market can reverse and then retraces to the 50% Fibonacci level, and the market will reverse at that particular level. So the highest, depending on the strength of the market, okay, so if it's very strong, then after a retracement to the 23% level, the market will continue the uptrend, okay, or the market can retrace to the 38%, and then the market will reverse and then continue with the uptrend, or it can retrace to the 50% and then starts retracing to the upside. So first of all, let's change the time frame to the lower time frame so that we'll look for our entry. Now, beautiful, if you look at this particular side, this is the 1 hour candles, okay, and then when the market retraces to the 50% Fibonacci level, we saw a reversal to or continuation of the uptrend. So this is how we use the Fibonacci retracement level. So this particular one, the market retraces to the 50% Fibonacci level, and we saw a continuation of the uptrend. Okay, so after the close of this bullish candle, then you enter for the buy side. Then your target should be the resistance area, and you place your stop loss just below the low of the recent or the previous candlestick. Okay, if you change the time frame to even 30 minutes, you can see clearly that when the market retraces to the 50% Fibonacci level, the market starts surging or moving impulsively to the upside. So this is how we use the Fibonacci retracement level to make our decision. So after the market retraces, then you confirm the market by checking the candlestick pattern, and then or a particular candlestick that is formed. So in this particular case, we saw a bullish engulfing candle that validates that the uptrend will continue. And so after the close of this bullish engulfing candle, we will buy the market. We will place our stop loss just below this particular candle, and our take profit should be the resistance area that is here. So this is how we use the Fibonacci to make our decision. So if you found this video helpful, kindly subscribe to my channel, comment, and then send me a DM if you are interested in joining my trading community. I'll teach you for free, I'll mentor you, add you to our trading community, and also we will help you start trading as a professional forex trader. So don't forget to subscribe to my channel, and if you need any other information, check my videos and you will get all the videos and then learn as a professional forex trader. Bye bye.